Hey there, folks. Discover how Singapore's budget 2025 is boosting DBS, OCBC, and UOB stocks, and how you can ride this wave for your investments. That's what we're diving into today. Welcome back to the Investing Iguana channel. I'm Iggy, your friendly guide to all things stocks, personal finance, retirement planning, and building wealth. I've been breaking down these topics for you in a way that's easy to grasp, and I'm thrilled to share that the Investing Iguana snagged the 8th spot in Tiger Broker's the 2024 Influential Tigers list. With over 768,000 reads and 53,000 likes, plus more than 700 videos racking up 300,000 watch hours by December 2024, we're growing strong. I love zooming in on what's happening in Singapore, the region, and even globally. So let's get into this Budget 2025 breakdown. Singapore's Budget 2025, rolled out by Prime Minister Lawrence Wong on February 18th, is shaking things up for our big banks, DBS, OCBC, and UOB. It's packed with goodies to support businesses and households, and that's a big deal for these banking giants. Think about it. When businesses get a financial boost, they're less likely to miss loan payments, and when households have extra cash, they spend more. Both of these mean more action for banks, whether it's lending money or raking in fees from credit cards and wealth services. The budget's got stuff like a 50% corporate income tax rebate, capped at $40,000 per company, and a $2,000 cash grant for firms with local employees. That's real money keeping businesses afloat, which keeps bank revenues steady or even growing. Now let's unpack this a bit. That tax rebate and cash grant combo is huge for small and medium enterprises, SMEs, which are a backbone of Singapore's economy. Healthier businesses mean fewer defaults on loans, and that's music to a bank's ears. It keeps their non-performing loan ratios, what we call NPLs, nice and low. Plus, households are getting $800 in CDC vouchers and up to $760 in USave rebates for utilities. More cash in your pocket usually means more swipes on credit cards or even small personal loans, both big revenue drivers for banks. This isn't just theory. It's a practical boost that could show up in these banks' earnings down the line. So, who's ready to geek out on this with me? Drop a bank on in the comments if you're following along. I love seeing you engaged. Each of these banks, DBS, OCBC, and UOB, has its own superpowers to make the most of Budget 2025. DBS is the big kahuna in wealth management, sitting on $365 billion in assets under management as of 2024. With the budget tossing in tax incentives to juice up Singapore's stock market, like deductions for listing expenses and lower taxes for fund managers, DBS could see a surge in fee income. More IPOs and trading mean more advisory gigs and custody fees for them. OCBC, on the other hand, plays it safe with a conservative approach, which makes it a perfect match for partnering with the new $11 billion private credit growth fund. That fund's all about lending to high-growth companies, and OCBC can dip its toes in without risking too much. Then there's UOB, the champ of loan growth, clocking a solid 5% year-on-year increase in Q3 2024. They've got a soft spot for SMEs across ASEAN, and that $1 billion fund aligns right up with their strategy. Plus, the budget's $3 billion top-up to the National Productivity Fund is pushing automation and AI, areas where all three banks are already investing. OCBC's got slick AI-driven consumer platforms, and DBS is killing it with digital brokerage services. These strengths aren't just random. They're why these banks are poised to turn budget perks into real profits. It's like they've each got a custom playbook for this moment. Let's take a quick breather. How's this landing with you? If you're thinking about investing in these banks, hit that like button to let me know you're vibing with this. All these moves could push DBS, OCBC, and UOB stocks upward. Analysts are buzzing, pegging a 5-8% upside for all three based on their target prices. DBS, for instance, is holding steady with a net interest margin, or NIM, of 2.11% in Q3 2024, even after a slight dip. They're also bumping up their quarterly dividend to 60 cents, up from 54 cents last year, giving you a juicy 4.93% yield. UOB is not far behind with a 4.75% yield, and analysts see a 7.97% jump in its stock price. OCBC is rocking an industry-leading cost-to-income ratio of 38.5%, meaning they're super efficient at keeping costs down while profits roll in. Real-world proof? Picture this. Acme Manufacturing, a small Singapore outfit struggling with cash flow as costs climbed. Thanks to Budget 2025's tax rebate and SG $2,000 cash grant, they cleared some debts and bought new machinery. That boosted their productivity and kept them in the black, lowering the risk for their lender. Let's say DBS. It's a win-win. Acme stays afloat and DBS keeps its loan portfolio healthy. This kind of story could play out across tons of SMEs, giving banks like DBS, OCBC, and UOB a solid foundation to grow their lending business. But hold up. Before you rush to buy these stocks, let's talk risks. Nothing's a sure bet, right? The Federal Reserve's expected to cut rates in 2025, and that could squeeze those net interest margins I mentioned. NIMs are basically how much banks make from lending versus what they pay on deposits. A lower rate could shrink that gap. That said, the extra loan growth from the budget might balance it out. Another curveball? That private credit fund could steal some thunder from traditional bank lending. If private funds start eating into their market, banks might need to get creative, maybe team up with them or offer hybrid deals. Any thoughts on this? Toss a comment below. I'm curious what you reckon about these risks. Here's a fun one for you. If you were a bank CEO, how'd you play this budget? Let me know. I might steal your ideas for the next video. Seriously though, these limitations mean you've got to keep your eyes peeled. Watch how these banks roll out their plans, like tapping into that private credit fund or snagging IPO deals. The budget's setting the stage, but execution's where the magic happens. DBS might lean harder into wealth management, OCBC could double down on efficiency, and UOB might push its ASEAN loan game. It's all about who moves fastest and smartest. So what's the takeaway here? Budget 2025 is like a tailwind for DBS, OCBC, and UOB, lifting their revenues through business support and household spending, playing to their strengths, and potentially driving stock gains. But don't sleep on the risks. Rate cuts and private credit competition could trip things up if banks don't adapt. For you, the investor, this is a chance to look at these stocks with fresh eyes. DBS offers stability and dividends. OCBC brings efficiency, and UOB's got growth vibes. Analysts see that 5 to 8% upside, so it's worth digging into their earnings reports as 2025 unfolds. Next steps? Start by checking out these banks' latest moves, DBS's dividend hikes, OCBC's regional expansion, or UOB's SME focus. Pop over to their investor pages or grab a free stock screener to track those prices. And hey, don't just take my word for it. Run the numbers yourself and see if they fit your portfolio. If you're new to this, my video on how to pick winning stocks in Singapore breaks it down step by step. Links in the description. Stick around, hit subscribe if you haven't, and ring that bell so you don't miss the next one. This is Iggy, your Investing Iguana, signing off. Keep growing that wealth, folks.